Good morning, traders and investors. Roger Scott here, senior strategist for Trading Pub, or The Trading Pub. It's Thursday, it's September 7th, and it's about 7:50 in the morning. The market's going to gear up to open up in about an hour and 40 minutes, and that's about as specific as I can get. Make sure to like these videos, ring the bell, subscribe to our channel on YouTube, join my Telegram channel. Just go to rogerscott.com/Telegram. Join our YouTube channel, and most importantly, post comments. I want to hear from you. I want to know what you guys have to say. I'll respond, and it'll help others answer questions. So post comments below this video. It'll help us out, and it'll help other people out. Now, let's get into all of this stuff. Now, remember, at 11 a.m., I have my VIP room. It's free for the summer. I still haven't closed it back up. People are loving it. We got over 250 people a day in there. Please show up. It's at 11 a.m. because it's Thursday today, and that's like the second part of this video several hours later. So I'll give you a full update throughout the day, and I have about 8 hot trades for today. Don't miss out. All right, Nasdaq 100 is down. Apple is down overnight. Apple is down because of China. The Dow's down a little bit, but the Nasdaq is carrying the brunt of the pressure. And this is, on the Dow side, this is very random. On the Nasdaq side, this is not random, 110 points. This would be equivalent to about 250 on the Dow, because look at the value on the Nasdaq versus the Dow. So this is definitely not random, but it is a situational, it's not broad market based. It's Apple, and Apple has a huge market share. China, well, I'll get into it when I talk about global economy. But that's one thing we have to pay attention to. The other thing we have to pay attention to is the bond market. So as I mentioned, it broke through this barrier here, and now it looks like it's kind of just sitting down on, volume is okay. It's gotten a little bit better, but it's been dying out. It's been kind of fizzling out after the holiday, which usually goes the other way around. Not sure if we're going to break this level or not, but if we are going to break this level, it's going to put higher pressure on yield, which would put more pressure on the stock market. So keep an eye on it. I don't think we have that much more to go to the downside in the near term, but we could go down another 2 basis points. So just keep your eye on the bond market. It does look like it kind of wants to come back up here, especially with the low volume on the downslope. So maybe this is it, but I'm not seeing any major moves. Now, today's Thursday. Market started up on Tuesday after Labor Day holiday, but today's actually the first real day that market participants are expected to come back. It takes a couple of days for the market to start up again after the holidays, and today's that day. We don't have big earnings. Most of the earnings are behind us. I send you a sheet on Tuesday that has the earnings if you want to look at them. Today we've got jobless claims. That's going to be a nothing burger. It's been very stable in the low 200,000, mid 200,000s. Productivity and cost, that'll be very important because right now we're focusing on the ISM, which was a little bit off yesterday, which kind of undid the survey we had, the JOLTS survey we had last week, and which caused the market to go above the 50-day moving average. Yesterday's report caused the market to go back below. So this was the positive report, and this was the negative report that undid it. The question is, are we going to stay below the 50-day moving average? Are we going to break down, or are we going to go back up? Well, to answer our question, and I'll talk about more fundamentals in a minute, but if you look at the QQQ, which was actually leading ahead till now, it's already at the 50-day moving average. And if you look at the Dow is already below the 50-day moving average. So this is not a good sign, but technology is still leading, which is kind of surprising in light of everything they've been through. Now, talking about volatility is still not rising really, so I'm not in a fear mode yet, and just because we're breaking the 50-day moving average doesn't mean anything. I mean, look, the truth is we're still in a pretty good range here. But if we do break the 50-day moving average, let's see how semiconductors are looking. The odds are we're going to go, and they're right at them right now. They're sitting right at them. So it can go either way. The odds are we will go back down to this level on all the indices, which is why I drew that green line. I should have drawn a red line and a red line here. But yeah, the 200-day moving average is really the next stop for the Dow. And that'll happen if we go down here. It's almost inevitable we would touch the 200-day line. And if we break the 200-day line, that officially puts us in a bear market. I do not like the fact that the trend line is moving lower across all indices. We couldn't make a higher high. That's very disturbing throughout the stock. See that? Higher high, lower high, and now it's coming down, and volume is not that great. And we're in September, which is not a great month. Not happy about it. Does it mean we're going to crash and burn? No, it doesn't. But it means we can kind of, go sideways and just create these little ripples and kind of consistently stay in this type of an environment for the foreseeable future. I mean, it's worked for ARK. Look at Kathy Woods. And speaking of ARK, the small caps, which are under the 50-day moving average, are coming to the 200-day moving average. And the Russell, WR, I haven't talked about the Russell in so long. Oops. IW. Let's look at the 2000 here. Let's look at IWY. Here we go. Still trading above. So Kathy has a lot of those larger stocks. But again, keep your eye on the 50-day moving average. The 50-day moving average is very, very, very important right now. The bond market and whether we break lower right here, and the 50-day moving average in light of the SPY, very, very important. Now, as far as sectors, and remember, today's Thursday, I'm going to give you 2 day trading stocks, and I'm going to give you my top sector and an ETF, top sector option and an ETF to go with it. So if you look right here, you could see over a 6-week period, energy, communication, technology, they're roaring back. Maybe not today. 3-week, same thing. Technology, energy. It looks like energy, technology are best friends right now, right? I mean, technology was all the way down there. But look at it over the last week. Energy, technology, QQQ, which is technology, consumer discretionary, which is technology, S&P 500, which is blue chips. But most of the components of the blue chips were lower, which is telling me the technology aspect and possibly the financial aspect of the S&P 500 is what's holding the S&P higher, because the S&P has 30% or 20% QQQ in it. So be cautious of the blue chip sectors. And also, remember, the Dow is leading on the way down right now. That one's already below the 50-day moving average. So the picture that we're getting from this is that blue chips were leading. Now blue chips are coming down. Let's kind of go through this as we're speaking. Utilities, healthcare, blue chips are now putting pressure on the market, not helping the market. Technology is now helping the market. But you still have some tidbits like financial, basic materials, home builders starting to come back. So to say the market is really mixed right now would be a huge, huge understatement. None of this makes any logical sense. If you look at it on a longer term, I mean, look at this. You've got consumer staples here, right? And you got industrial here. You've got consumer discretionary here, and you've got Russell 2000, which has so much consumer discretion in it here. So the market is, you got consumer discretionary here, and you got retail right here. I mean, you can't make this stuff up if you tried. That means the market is really, really trying to find a groove right now. And the fact is, the Dow Jones is here, QQQ is here, and the S&P is in the middle. So right now, energy and technology is where the money is. And let's look at energy real quick. Matter of fact, yesterday we went long Oracle, which is technology, and we went long SLB, which is energy. So, and yeah, we broke out here. This is very bullish right here. Volume is picking up. It's not dying off. This trend is not dying to fall apart. I like this trend right here, and I really, really like it. And I like the QQQ, although not liking it as much as energy because it's coming down and it may be breaking the 50-day. There's a chance that it'll hit the 50-day, kiss the 50-day, and start coming back up. But honestly, because we're in September, because the markets are so fragmented, because there's no clear catalyst, earnings are behind us. I can go on and on and on, but I just don't see a major catalyst to the upside. Now, let's kind of put everything together right now and kind of understand why things are doing what they're doing. So unexpected rise in the key U.S. service activity gauge bolstered speculation that the Federal Reserve would have to keep interest rates higher. That's this report right here. Where is it? Where's that report? Just lost it. Here it is, ISM. This ISM report came out yesterday, and the number was a little bit weaker. Part of the consensus was weaker than they were expecting. Matter of fact, here, ISM Service Index unexpectedly rose to a 6-month high of 54.5, stronger than expectation. That takes a little bit of a bite out of the market, and that's what caused us to go back to the 50-day moving average. That and Apple. So tech-heavy Nasdaq notched a 1-week low. Thank you, Apple. Blue chips notched a 1.5-week low. So you could really see right there that the Dow is weaker on a relative strength basis. Apple plunged 3%. Biggest losers on the Nasdaq, huge market cap. Wall Street Journal reported that China has instructed government agencies to cease using the tech giant's iPhones and other foreign electronic devices at work. Okay, what's that all about? I already told you about the ISM. ISM service sector report underscores the resilience of the largest portion of the economy. Unfortunately, the price paid component moved in the wrong direction, similar to the higher price paid in the manufacturing report. So it takes pricing is very important because pricing is evidence of inflation or deflation. Why did the JOLTS report, why was it beneficial? Because it shows that we're not having inflation in pay, that employment is under control, so employers don't have to pay a lot more money. That's deflationary. But now this is the price paid component, which is moving. So wages are moving down, but prices paid for parts are moving higher. Not good. Susan Collins said Wednesday that policymakers will need to exercise patience as they access economic data to determine their next course of action. She's not saying they're lowering rates. This phase of our policy requires patience. Patience. You see that? And a holistic data assessment. Basically, they want to see what will happen before they make any decisions. They're being as clear as day. There's only a 7% chance we're going to be raising rates this month, but of almost a 43.5% chance or 4% chance in November. And I think that's very, very possible, which is why the bond market is starting to soften up right now in anticipation of that. The Fed's Beige Book released Wednesday indicated economic activity was modest in July and August, with subdued job growth across U.S. and a slowdown in price growth in most districts. That's good. We need subdued job growth. That's deflationary, and we need subdued price growth. But not today's ISM report, or yesterday's, excuse me. Wait a minute. Was it yesterday or today? Days run into each other. That's yesterday's report. Sorry. Days, like weeks, run into each other for me. We've got jobless claims, not expecting anything big. We got U.S. unit labor costs. That part, again, big evidence of whether we're moving higher inflationary or not. Labor costs, productivity costs, equipment, supply costs, all these things are that's what the Fed is watching. All these little pieces of evidence to see whether we're going up or down in inflation. U.S. crude oil inventories will be reported today. Watch out for that number. That number comes out at 11 a.m. So watch out for energies intraday today, okay? We're looking for John Williams and Bostic speaking. I'm expecting them to say we're in a wait-and-see mode. Europe is looking a little bit better. They clawed back from their German data, which was bad. Gains in utilities and construction stocks are leading the overall market higher. They're definitely not keying off of U.S. right now. China closed lower after trade data indicated continued economic weakness, while the prospects of renewed U.S.-China tension also weighed on sentiment. Customs data showed Thursday that Chinese imports and exports contracted at a rate slower than anticipated. That's like swimming with a 50-pound barbell around you in the U.S. Japan closed lower today, snapped an 8-day winning streak as rising U.S. yield, that's right, and concerns over a decelerating Chinese economy weighed on investor sentiment. Apple is down. That's going to put pressure on the stock market. Sportsman and Dell is coming up from earnings. Sportsman, I'm going to be talking about it in just a few minutes. As far as sector ETF, well, we only have two choices today. We've got the QQQ, which is down and moving down. No. And we've got the energy sector. Now, you know me. You know how I play. Definitely energy. No question. And if we look at this chart, energy. Is anything else really popping back that great? Well, financials look okay. Let's see here. Just not loving it. Not loving it at all. No, actually, guys, honestly, I hate to say this, but the only thing that looks good is the energy sector. Really, I'm just being straight with you. If you look at the options, I would go out probably go to 1020 if you're looking for a longer term move and buy the 91 strike price and sell the 96 strike price. Buy the 91, sell the 96. If you want to go aggressive, and I know a lot of you do, we have 8 days left on the 9/15 expiration. Buy the 91 or 90/50. Just buy those and hold on to it for the next 2-3 days. If there's no soup, just get out. Day trading stocks for today. WHLR. Let me just go to this. Intraday. The stock is up 107%. Look at this downtrend. It's about to hit the 200-day moving average. What a crappy stock. What a crappy stock. Here's what you do. You sell the stock. If it goes down, and it may in the next couple of days, if this stock goes down to 570, you sell the living crap out of this stock. 570. And just because it's up $9 doesn't mean anything. It's up overnight. It closed yesterday at 450. If this thing goes back below 570, sell this stock short. And the next one is SPWH. The stock is down 24%. 24% overnight. It had nasty earnings, but here's what we do. The stock is right now at 345, barely trading. If the stock goes above $4, you buy this stock. Next 2 days. $4, you buy this stock. Nice and simple. And if you have any questions, if I didn't cover something, post below the video. I will respond to your question within the next 4 hours. I will. Or send me an email, roger@rogerscott.com. It can't be any easier than that. Now, folks, if you haven't heard by now, my data mining software, man, it's crushing the market. We've hit 10 winners in 12 trades dating back to the beginning of June. While the market hasn't been great in June, I mean, look at this. Look at the market this whole year. Since June, in here, we had 10 winners out of 12 trades in June. Average gain, including winners and losers, 35%. Not bad, right? Now, not only that, but the average hold time is less than 10 days. The S&P's got nothing on the software potential. We're even blowing the world's best hedge funds out of the water, like really blowing them out of the water. Now, what makes my patent-pending software unique is that it can track when hedge funds are likely to dump millions into any stock at any time. I call this stealth surges. That's right. And so far, the results are just amazing. Click the link below. Check it out. It's happening tomorrow on Friday, and I believe it's happening at 1 p.m. Don't miss out on Friday's class. All the details are below this video. Come to my VIP room today at 11 a.m. I love to see you there. Send me email, roger@rogerscott.com, and post comments below this video. Have a great Friday Eve. That's right. Bye.